Hey there, welcome to the 40 Finance channel. My name's Jeff Beers, and today is September 1st, so it's a good time to take a look at the QQQ and the TQQQ ETFs, kind of take stock of where they've been over the past 30 days, and it's been a wild ride. And I personally own both of these, the QQQ and the TQQQ, and I'll share a little bit about where my position stands, how I look at things. But let's first go in the rearview mirror and see how August was. And in order to do this, I'm just going to start with the QQQ to make things easy. And let's take a look at the 1 month chart. So I'm going to click on that. And you can see that August was not a good month for people like me who invest in the QQQ. Although I will say, if you trade the QQQ on a regular basis, say day in or day out, you've had multiple opportunities to make some money. Coming into the first part of the month, you were at 314. Looks like the high was 333, maybe a little bit higher there. And here we are on September 1st, drowning out into the 290s. The low, in case you're curious, I think it was about 3 months ago. Actually, let me do year to date. It looks like the low was, I think it was 268, 270, something like that. But I started my QQQ journey back in November, December, just buying pieces here and here as the market was deteriorating, because you never know when it's going to find solid footing. Now that solid footing started perhaps to reappear. You had a flash here in May, and then, for the most part, the back end of July and into mid-August, things were looking pretty good. But here we are on the slide down again. And of course, if you watch the stock market, the Fed's come out with the heavy hand. Interest rate hikes are on the table for the foreseeable future. We've had, I would say, mixed earnings. The earnings for most of the companies in the Qs haven't been absolutely horrible, but they're certainly not comping at the same pace that they were last year. So there's a lot of fear in the market, and I don't think that's much of a surprise to anybody. Okay, next we're going to look at my holdings of the Qs and TQs, but before we do that, I have to remind you about the SeekingAlpha special sale that they're having right here in the fall, $99 for a full year of the premium subscription. This is something I use on the channel all the time. And if you sign up with my affiliate link down below in the subscription, you not only lock in really the best price that I've ever seen since I've been doing this channel, but you also help support the channel as well, which I definitely appreciate. And with this, guys, it is risk-free in the sense that you have a 7-day free trial. You will have to put in your name and credit card and all those things, but right within your dashboard, you don't have to call 1-800 or anything. You can actually cancel your free trial before the payment date. And so it's a good way to kind of experiment. If you're interested, lock in the best deal. And then if you change your mind 5 days later, no big deal. All right, so now in terms of my holdings with the Qs, we have this portfolio here that I set up. It's connected to my Ally Invest account directly through SeekingAlpha. And we have QQQ. Today is at 293. Right now, I have 53 shares, average cost of $357. So right now, I am down 18% on QQQ, but I am not selling it. And same goes for TQs. It's currently at $26. $42.54 is my cost basis at 171 shares. And the value is only $4,500. So I'm way behind on the TQs, and I've talked about this in previous videos where we went through vacation. I had some other family things. I have not been able to put as much money into investing as I'd like to, but I've sensed that tide is changing in some of the things going on. I've paid some of my bills, and now I can grind down, and it happens to be a very good time to buy into the Qs in general if you're a believer, and we're going to talk about that next. I'm going to share with you my simple rules for investing in this one. So here we are with my, and it says TQQ rules for 2022. And it really, for me, honestly, it applies to the Qs, regular Qs as well. But you have to be particularly careful with the TQs for obvious reasons, because it's 3x leverage performance of the regular Qs. And you see what's happened to me so far. I'm at $42. We've had a stock market decline here over the past 2 weeks, and the price is now 26. So I'm behind the 8 ball on this one, but I am holding, predicting to hold for the long term. And here's how I manage that. First of all, I understand the risks. Okay, and that's the most important thing, and that's a lot of the chirping that you'll hear out on the internet. If you're a TQ's investor, there's a lot of risks. There's a lot of manageable downside. I've done tons of videos on this. I'll link them in the description so that you can take a look. But you just have to know what's going on. That's the bottom line, and make sure that you're comfortable with it. Always be bullish on the long term. So for me personally, I believe that over the long term of the stock market, I believe that the QQQ will outperform the S&P 500. I believe that the TQQQ will essentially, of course, triple that performance. So when you put those two factors together, it leads for a bullish outlook, obviously, on not only the stock market, but the intersection of stocks and technology, which is really where my interest lies in terms of looking at names and companies and doing my research. All right, how about number 3? Buy at or below the 14-day RSI of 40. So we'll go back to that chart. If you're familiar with the relative strength index and tracking that for purposes of the Qs, you'll know that we are below 40 right now. So based solely on that rule alone, it is a good time to buy the TQs, but we'll dig a little deeper. But just to know, you're really only supposed to buy this under the plan that I follow when it's at a weak point, RSI under 40. All right, the flip side of that, sell shares or options, depending on how many shares you have, above an RSI of 70. So this is optional to some degree, depending on how long you plan to hold something like the TQs. But worst case scenario, if you can get into the hundreds of shares and you see that RSI spike to 70, you could take advantage of the opportunity and sell some options against it. Number 5, and this is where I'm struggling big time over the past 30 to 45 days. I just don't have a lot of cash to invest. I keep my minimums, right, for my emergency savings and all the things that you have to do. But right now, bills are exceeding where I want to be from an income standpoint, just from the nature of this time of year, back to school, vacations, all kinds of crap going on at my house. Luckily, everybody's healthy and happy, but it's just not a really good time for me to put money into stocks. Now, I've been trying to dink and dunk with one share here or there, but my options are limited because I do want to keep that cash available. And there's a certain point when you have a family, like I do, that you have to be responsible. You can't go all in with your eyes closed. So I have struggled with this rule number 5 in terms of being able to jump in when the RSI line is below 40. All right, number 6, we've talked about hedge plans in the past. To be honest, I really haven't done this very well. The only thing that I can relate from a hedge standpoint is I'm not just in TQs by themselves, right? I have other stocks, none of which are doing very well right now, but I do have other stocks, and I also feel that the Qs, the regular Qs as a whole, is in some ways a hedge plan in the sense that the regular Qs are not going to go to zero. I suppose there's some sort of apocalyptic scenario where that could happen, but I do need to do a better job of purchasing a hedge that, you know, it's hard for me because disproportionately you should pick something that is the exact opposite of the Qs, and I'm so bullish on the Qs for the long term that I really haven't found that right hedge match besides the simple, you know, savings account, all those things. That's the best bet that I have. All right, and then lastly, and I just added this line in terms of getting into maybe the end of this year, certainly into January, February of next year. You know, my short-term goal is to get to the full 100 shares of Qs and 200 shares of TQs. I think the 200 shares is going to be pretty easy because it's only, I got 29 shares to go. Price is like $25. So it's just a matter of moving some money around to get to that place. So I definitely foresee this goal getting knocked out of the park. It's this one that could get a lot more expensive at roughly $300 a share. I still need 4,750 shares to get there, so that's $15,000. We'll have to see if I can make that goal happen. Flipping back over here to SeekingAlpha, I did want to call out the RSI. I'm going to switch this to the 1 month view. And you can see that as of right now, you have an RSI of 36. So you are indeed below the 40 mark that I'm looking for in my rules. Basically, since it looks like maybe the 26th of August, perhaps the 27th, but you've had a nice stretch here if you've been waiting for that weakness to come through. But what about the 70 mark, the over 70 RSI, when you could potentially sell? And even in the peak here of August, it looks like you were right on the line. I'd have to get out the tracker to see, just the raw number to see if it actually did hit 70. But if it did, it was just barely. And that was only for a couple days, and then it's since come down. So even if it hit 70 tomorrow, that doesn't mean the price would be profitable for me. And that's certainly the case that I'm seeing today. If the thing went crazy, and let's just say went up $10 from here, from 26 to 35 with an RSI of 70, at least for the TQs, it's not going to make a lot of sense for me, right? Because I'm still going to be underwater. Even the regular Qs, I'm at 357. This thing shot out to call it 325 and had an RSI of 70. I'm still not selling because I'm still underwater. Wouldn't make a lot of sense. Now you might be wondering, well, you're looking at RSI here on the Qs. What about the TQs? And honestly, they run just about parallel because they're built on the same index. So it's just a lot easier and, in my opinion, more reliable from a trading volume standpoint to just follow it in the Qs. Next here, let's take a look on how the holdings of QQQ are looking as we enter into September. There's actually been some changes in here. Some stocks have come down and some stocks have floated up. You still have the two top dogs, Apple and Microsoft, and I'm not sure if you can see this. And let me see if I can make this a little bit bigger and keep it on the screen somehow. You have Apple in at 13.57% as of September 1st. You have Microsoft at 10.42%. So you put those two together, 25% of the fund, 25% of Qs, 25% of TQs are buried in these products, right? Or excuse me, in these stocks, 25%. And you see Amazon at 6.8, they're riding right in there. Then you got, who else has moved a little bit? So I've personally noticed that NVIDIA market cap has come down, so it has come down as well. It used to be a little bit higher, I don't remember exactly. And now you're seeing Pepsi. Pepsi was not a top 10 or 15 holding in the Qs, but it has moved up. You also have Costco. And I think when I ran the numbers, don't quote me on this, but I think if you take Costco on up, this is your 50-ish% of the Qs, okay? So Apple, Microsoft, Amazon, Tesla, Google, Meta, NVIDIA, Pepsi, and Costco. That is 52-ish%, if I remember correctly, of the fund as we sit here on September 1st. Now, what I see personally as the beauty for the Qs is the fact that these numbers rebalance. It's based on market cap. So if all of a sudden Apple and Microsoft tanked and their market cap dropped, well, at the next rebalancing event, you would likely see Amazon, Tesla, and Google move up. Or perhaps, if you're thinking about up-and-coming companies, if you went down here and started to look at the, the second tier, you have Broadcom, Cisco, T-Mobile, Adobe, Texas Instruments, AMD, Intel, PayPal, which used to be a top 10 or 15 stock, it's down here. Netflix used to be near the top, same with Starbucks. All those companies have taken a beating, but if the dynamic changes from a quarterly view, and let's just say Starbucks goes bananas, right? Let's just say Netflix goes bananas and starts going up, this will shift and you'll essentially own a bigger percentage of, let's just call them the hotter stocks, while the colder stocks will creep down based on their market cap. So it's a great way, ETFs in general, whether you like the S&P or you're doing it this way with Qs and TQs, you get that rebalancing where, you know, it's not going to be good news that a company like AMD might struggle in the short term, for example. I'm just making that up. But on the bright side, you don't just have AMD, you have all these others. So if you turn around one morning and Starbucks, you know, launches 57 million stores somewhere, that's obviously good news. And Starbucks, when they start to see the results from that, they'll start to creep up and you'll have a larger percentage of Starbucks stock. All right, next we're gonna take a look at these holdings from the perspective of SeekingAlpha's tools and some of the ratings and upgrades, downgrades that have been going on. So I built this, you know, by hand in the sense that I just picked the biggest companies in the Qs, they're roughly 50%. Now we've had a lot of changes if you take into account, you know, we talked about AMD, PayPal, etc. But for the most part, the 50% is still represented in here. And what you can do in SeekingAlpha, just to give you an eyeball view of the Qs and how are things going, you can use their tools, right? So this upgrades, downgrades. You know, you get a list of who has gotten upgraded or downgraded as it relates to the holdings that I've put in, right? So I like to go into this growth column, and I like to just make sure that some of these companies, or really as many as possible, are still on track for growth, right? We're in Q3 of a traditional financial year, so we're getting closer and closer to understanding what next year is going to look like, right, in terms of guidance, etc. And you can just go down these columns. So this one, revenue year over year, you know, Google has struggled to maintain the same performance level, but you're already at 26% year over year. And next year you're looking at plus 20. So a declining comp, right? A declining comp here, but still plus 20%. So let's not get it twisted. T-Mobile, revenue year over year, plus 1%, projected at plus 7% next year. And you just go down this list in general, you have one negative on the revenue side, one negative, and that is Intel. They're minus 5% year over year, projected at minus 4% next year. But that's pretty good, and you got a crap load of double digits, right, in this revenue column. So to me, that kind of outlook is very good, particularly for something that is trending down right now. Obviously, we are in an odd environment economically. There's a lot of things that could still go wrong. But today's forecast, from a revenue perspective, looks pretty good. All right, so what's my gut on the September outlook for all the Qs? You know, I'm not making any promises, that's for sure. We still have a lot of uncertainty. I'm going to live by my rules. First, I need to get cash flowing again so that I can buy on these low RSI days across both of those. They will likely be the only stocks that I purchase in the month of September will be the Qs for the long term. We know the market is weak right now, and we know, if you look at this Fed calendar, we know that September 20th and 21st is going to be your next rate hike, right? And it's pretty much locked in. But what's interesting with September, if you're new to Fed meetings, is you also get the summary of economic projections. And this is interesting because it's one of the few times that you get them to come out and project or actually write down what they see is going to happen for next year in terms of economic recovery, growth, GDP, all those things. So it's a real whiz banger. heading into the second half of September on the 20th or 21st. I don't think you can concern yourself with the Fed too much right now. It could very well be another 12 months of pain with no gain, but eventually, at least in my opinion, buying the Qs on the right times, trying to get in on those RSIs under 40, that's the lane that I'm sticking in. And hopefully in 2 years, 3 years, 5 years, whatever it takes, we will be rewarded. All right, guys, hope you enjoyed this September look at the Qs and the TQs. Let me know if you're buying in during this weakness right now. And don't forget, before you go, check out that special offer for Seeking Alpha. My affiliate link is in the description. Thank you to everybody. Hope you're doing well. We'll see you on the next video.